Hi traders and welcome to the daily recap show for Friday the 22nd of April. So as always we'll start off with the FTSE, and we said that there'd been a sell-off overnight on Thursday night with the FTSE trading around the 75.33.43 zone, which had been key support to action at the open there may be telling. We said if it rejected that zone, has an impulsive push through the overnight support at 75.06 at 75.12, we could see moves lower towards 74.53 to 74.60. But if we got a sustained break back above 75.33 to 43, we had initial resistance at 75.65 to 72, with main resistance today on Friday at 75.91 to 98. We said that we notice here we did say we had flash PMIs which can cause volatility in the markets, so caution should be exercised. So now let's go and have a look at the FTSE on Friday. Okay, so as you can see, in the pre-market, we actually got this sustained break above that 75.33 to 43 zone. We then pushed up and we went straight through that initial resistance at 75.65, 72 on the open. You can see this really strong impulsive push through, no reversal signal whatsoever, so nothing to look to get short from there. And that actually then sort of catalyst up to the main resistance zone at 75.91 to 75.98. Now notice in the reports I talked about the flash PMIs which could cause volatility in the markets. Now the first set of PMIs was at 8:15, which were the French PMIs, and these can still have an impact on the all European indices. And notice here we had a reversal signal here at the main resistance zone which failed. So you did have a very valid signal there, reversal signal at the main resistance zone, but notice that it failed right at the 8:15 numbers. So that's why we exercise caution around the when there are news events. The next set of PMIs were the German PMIs, which came out at 8:30. And notice again, we had the push up. We got this really strong push back down, setting up a potential false break by having a push up and then a strong close back down. But this didn't. This false break didn't confirm, and we then got another push up towards into sort of 9 o'clock. Notice we got that false break, that liquidity grab there as well on that push up. Now this isn't a trade that I would have taken because we were then above this zone, so there's the potential that we retested and pushed higher. However, it was interesting to note that it had taken out that liquidity. We then got this pushback, pull back down, and we set up a continuation pattern from the zone. It's another valid signal. But the next set of PMIs was at 9:30, which was the British set of PMIs, the UK set of PMIs. So notice that into 9:30 we got this continuation pattern which pushed up and then it failed. So notice that there were some signals around this zone in that morning session which were all valid signals, but because we had those numbers out, we exercised the caution. And it's always better to be aware of those issues, because they can create this sort of chop and false breaks and false signals and stuff, which this would also potentially, maybe you would have been able to get some manage the trade and come out for a break even, but ultimately that would have potentially even been a losing trade as well. So now I want to talk about the difference between what happened once the PMIs are out the way. So that was a morning session, that was a morning PMIs. We didn't have any more PMIs until the afternoon, and the US PMIs which come out at 2:45. But notice we then got another strong push down here, back below this zone, again suggesting a potential false break. Similar to this one here, but look at the difference in the reaction once we got back below. We came down, we retested, and we got a beautiful continuation pattern there, having retested the zone, rejecting the zone here. When we got the push down, we pushed straight back through. Here we pushed down, we come back, we retested, and then we pushed down again. So that's the difference in the price action. But also by this point at 10:30, the PMIs are out of the way. So the numbers are out of the way. The market's going to be able to react to normal market conditions, certainly up until that US session. So this was a really nice trade to take, and then you push down into this initial resistance zone from the morning session. Notice how this then did act as a little bit of support, and then we got into the US session here, push down, pull up, again, the PMIs were out of the way by this point. Pull up, and we've got a really nice continuation pattern here again as well, coming down and back into this support zone. Now, over the rest of the US session, so there's a couple of really nice opportunities there on the FTSE. And there was actually a couple of, as I said, as I pointed out, there was a couple of really nice setups in that first initial session as well, or the initial part of the session. But because those PMIs were there, that's when you need to exercise caution. Once the PMIs are out of the way, there was actually a couple of really nice setups as well. So that's the importance of knowing and understanding these news events and how they can affect your trading decisions. As I say, there has been a sell-off over in the US session, both on the FTSE and the Dax, and we have on the FTSE now come down, and we've actually broken below some key support areas at 75.06 to 75.12. So it's going to be interesting to see where the market opens up on Monday. So we will be, so please, make sure that you pay attention to our reports on Monday morning to identify where our bias is, where those key zones are going to be now, because there could be a little bit of change on the tone and where our bias is going into the next couple of sessions. But that's the FTSE. Now let's go and take a look at the DAX. So on the DAX, we spoke about a big sell-off again, and we said we had some support at 14.225 to 245. So that would be a key zone for the market on Friday's session. We said we had initial resistance at 14.360 to 375. If we got sustained breaks below 225 to 245, we had support at 150 to 170. Acceptance below with an impulsive move, and things can turn bearish again with moves towards higher time frame support at 13.965 to 13.990. And again, we just mentioned about those flash PMIs in that morning session. Okay, so on the DAX, we had this push up into the initial resistance zone at 14.360 to 375, and we did get that rejection here. Unlike the FTSE, this wasn't a false break. As I say though, this was right on the French PMIs. We still had the German and the UK PMIs to come, so I wasn't looking to trade this. It is a nice trade. It's good to identify these sort of setups so that you can start building those pattern recognition skills and know what you're looking for. But this, because in normal market conditions, this would have been a tradable setup. But on Friday, with those PMIs, this was not something I was looking at. But you can notice again, once we got these PMIs out of the way and we made that lower high there, we then the market then went on and the price action got a lot cleaner, and then we had this push down into that 225 to 245 zone, which we said would be potentially a key area. A little bit of chop below it, but nothing sustained. We've got no sustained breaks below it before we then had this corrective pull back. And then notice here we got this strong impulsive push down, and then on the retest again a little bit choppy, a little bit unclean, but then that strong impulsive push down to get a sustained break below. We had some support at the 150 to 170, but notice all the reactions from these support zones was very, very corrective. All the impulsive moves on Friday's session were to the downside. And like the FTSE, we have seen that sell-off again in the US session. We've actually broken down below that 14.150 to 170 area. So again, it's going to be very interesting to see where we open on Monday, as we may be looking at a bit of a bigger correction coming in the markets. But we'll let the market dictate to us, and we'll let the market tell us and communicate to us exactly what it's going to do. So we'll keep providing these the reports with the key zones and where our bias should be, and where the inflection points are, and when we should be changing our bias as well. But so keep an eye on the reports. If you haven't already, as always, please come sign up to Key Zone service to join the Key Zone Traders community and receive these reports before the market opens. And once again, I know I've mentioned this a few times in my recent recaps, but we have got a big week coming up. It is Key Zone Traders' birthday this week, so please come follow us. Keep an eye out on our social media channels. We're going to be making a series of huge announcements as well, which is going to provide a lot more content, a lot more value to our members and our supporters. So please, if you haven't already, please come subscribe to our social media channels. Follow us there, because we're going to be giving out some great products and services and information that you're really not going to want to miss out on. So I hope you're all having a great weekend. I hope you found this useful, and I'll speak to you again this week. Cheers.